In October 2017, Helios and Matheson, a very sleepy and dormant data analytics company, acquired MoviePass when they only had around 20,000 subscribers, and they had a subscription fee of only $50. Now, if you don't know what MoviePass is, it's essentially a service that you subscribe to once a month, and you can watch one movie at any theater anywhere in the US each day, every single day. You're limited to one movie every single day. And when HMNY, Helios Matheson, acquired MoviePass, their subscription fee was around $50, and they slashed the pricing from $50 down to $9.95. Now, if you guys go to movie theaters anywhere, you know that the average ticket price is over $10. So this business model was, of course, not going to last. And when HMNY acquired MoviePass, like I said, they had 20,000 subscribers. Now they've ballooned to over $3 million. So let's see exactly what the rise and fall of HMNY was and what the future outlook for this company is. I think it's pretty interesting and it's pretty relevant in the penny stock community. So, if you're familiar at all with trading penny stocks and you were around last October, then you've definitely heard about HMNY. This is Helios Matheson, and here's just a quick little breakdown chart of how their stock price reacted when they acquired MoviePass. So you can see in August 15, 2015, they acquired MoviePass, and they cut the pricing from $50 down to only $9.95, and at this point they only had 20,000 subscribers. So you can see the stock price wasn't too affected. And then in September, they announced that they surpassed 400,000 monthly subscribers. And of course, this caused a big stir in the penny stock community, and it spiked up from around $2.51 up to $32.90 in around 1 month. Now, of course, this is unsustainable growth, and this is an obvious supernova, and it came crashing on down. Later on, in December 20th, they passed 1 million subscribers, but you can still see that the company isn't really doing so well, even though they doubled their subscription count. So exactly what happened? Well, this has to do with the fact that they've reduced the subscription from $50 down to $9.95, and this is just a completely unsustainable business model. Now, MoviePass does not get any discounts when they buy a customer's ticket. They pay full price, just like you would if you walked up to the ticket booth and bought a ticket for any movie. So with the business model of having a subscription service for $9.95 a month, where you can go to a movie every single day and the average ticket costs over $10, with the first ticket they're losing money. Now, this is of course going to burn through a ton of cash, and as disclosed in their 10Q filing, they've on average burned through $21.7 million of cash every single month, and they only have around $18.7 million of cash available in their reserves. So this means that they need to raise cash and raise cash fast. The way that they've done this, they have offered up a ton of preferred and common shares, and they've done a 1 to 250 reverse stock split to keep their stock price above the $1 threshold that the Nasdaq requires. They did this reverse stock split around a week ago, and it jumped up their price to around $25, and it's already dropped it down to the closing price of today of around 50 cents. So of course, this shows that investors and traders obviously know that MoviePass is not going to last, and this has also caused a bunch of investigations, lawsuits, and so forth by different law firms, claiming that HMNY has wrongfully caused investors to burn through their money. Although the company HMNY believes that their goal in MoviePass is not to make money on the subscription side, they've already acknowledged that their subscription side of the service will never make money. Their goal is to try and make money off the data from their customers and selling that data to the box offices and the movie developers. For some reason, they think that they would want the data when they already have access to that data from people like AMC, Regal, and Century Theaters. AMC, a national movie theater chain, recently developed its own type of movie pass called the AMC A-List Club, and this essentially is a service for around $16.95, and it lets you watch 3 movies a week. Now this kind of sounds like MoviePass in a way, and it sounds like it wouldn't be profitable, but the thing is that AMC, because they are the movie theater themselves, they don't need to pay full price for their tickets. They only have to pay the price of renting the movie, and that comes out to around 54% of a regular ticket cost, which is far less than the full price of around $10. And also you have to consider that because AMC is the movie theater itself, they make money off of the concession stand, which MoviePass makes no money off of whatsoever. So this is already showing that the business model that MoviePass has is very open to competitors, and it's going to be very hard to compete with movie theaters who are going to be developing their own type of subscription service like AMC already has. Also, one big thing to note is that AMC's A-List already has 15 million subscribers in their service. So this means that even though MoviePass has around 3 million subscribers, and their goal of selling off their customer data to movie theaters and box office advertisers is not going to work out too well, because AMC already has around 5 times the amount of data that they need. Now the reason why HMNY is so relevant in the news today is because they had a blackout service interruption upon the release of Mission Impossible 6. Now they didn't have cash to pay their vendors and payment processors, so MoviePass holders were not able to go and watch the most recent Mission Impossible movie, and this of course caused massive frustration, and a bunch of customers canceled their service because the main reason why they bought it was to watch movies as they come out. Now I just want to bring up this chart of HMNY and go through a little technical breakdown, because this is a trading channel first and foremost. So if you are new to trading, you would probably look at this chart and say, okay, so why was HMNY valued at around $9,000 back in October? Well, it wasn't. This is the result of reverse splits, and more specifically, HMNY did a 250-to-1 reverse split. So this essentially means that if you had 250 shares of HMNY when it was $1, after the reverse split, those shares turn into 1 share of $250, and that's why the price is so skewed. So essentially you can break this down in simple terms and say that, okay, if you invested $9,700 in HMNY on October 11th, 2017, now it's worth a measly 49 cents. This is basically 100% loss, and just goes to show how terribly mismanaged this company was, and how terrible their acquisition and planning with MoviePass was. So let's just go into today's price action, because I do want to go over this, and I do want to bring up the news as well. So going into today, we had, I think, like 6 or 7 news releases come out, obviously trying to pump up HMNY as much as they could. So you can see HMNY opened up at a price of around 85 cents and squeezed up to just under $2 within the first hour of the market open. Now here are the news releases for HMNY. Let me go back to today. You can see the first announcement came out was right here. It was this one right here. MoviePass accelerates plan for profitability. So essentially what this says is that they're going to raise their subscription price to around $14.95, and they're going to blacklist people from watching box office movies that are going to be seen in over 1,000 theaters nationwide until the movie has been out for 2 weeks. And this is probably going to help them not have to buy so many expensive tickets, and they claim it'll make them reduce their monthly cash burn by 60%, but analysts are still saying that that is not a high enough price, and it's going to cost them a lot of customers because no one likes when you raise prices on them. And two, like I said earlier, the reason why people bought this service is to watch new movies as they come out. So no one's going to want to pay for this subscription if they cannot watch the movie as it comes out. And you can see that so many news releases came out today, and they were just trying to pump it up higher and higher and higher. Implements cost reduction. MoviePass says it believes it can reduce the timeline to reach profitability, and there's so many news releases to pump it up, and that's what caused this astronomical short squeeze. So in my chat room and in my live stream, I was saying, guys, do not buy into this spike at all, mainly because we did not catch it early enough. The only time I would have ever recommended buying HMNY is on the breakout right here over 85 cents. But by the time that my chat room noticed HMNY, it was already halted into this squeeze at $1.12. And I was saying, guys, this will likely squeeze up further after the halt, but don't buy into it because this is overall a failing company and it is not worth it. We saw what happened with stocks like LFIN, which let me just bring up now, had huge fraud, and this one completely collapsed, and it got T12 halted for over a month, and now it's down at around $6 when it was averaging price in around the $37, $38 range. Very, very, very risky stuff. And the day that it got halted, it was at $26. So that's a 85% drop just by, you know, being too hungry and being too greedy and wanting to trade whatever moves. So the key lesson for today, guys, is that you do not need to trade anything that moves because it is very risky. The thing about day trading is that you don't want to try and maximize your profits. You want to minimize the risk. And even though HMNY could make you money on this squeeze, you can see shortly after, it immediately fell down and dropped down to 55 cents. And now that's why I always recommend all of my traders to always have a plan before you trade and only trade based on a certain strategy. Here on HMNY, other than the breakout over 85 cents, if you bought after this halt, you're not trading a strategy. You're trading, essentially, you're gambling. There is no pattern. There's no edge. And you're just hoping that after you buy, it's going to go higher with no, like nothing that's really going to help support your claim for it to go higher. You know, like when we buy these flat top wedges and we buy these breakouts, we have a set history data that says that over time, these breakouts work more often than not. However, buying after the halt like this, super volatile, super risky, and I can almost guarantee that there are traders probably watching this video who bought into this this huge squeeze above $1.44 and got burned on it as it fell on back down. So what does this mean for HMNY? I believe that they're going to go bankrupt very soon. Like I said earlier, if they want to stay listed on the NASDAQ market, they have to stay above $1, and they're at under 50 cents. So either they have to do another reverse split, which will really hurt the company, or they have to become listed on the SEC or on the OTC, which will, of course, hurt shareholder value. Now, if they happen to somehow make the company profitable, I still don't think that it'll ever get above $1 and stay there, just because of how much debt and how much liability they have after having this massive failure of what is known as the MoviePass acquisition. So that's just a quick lesson for you guys today on HMNY. Just wanted to break down the brief history of it. I think it's pretty interesting and I think it's good to learn. With that being said, hope you guys enjoyed this video, and I'll see you guys tomorrow.